This is Satya Pradyuman of Cirrus Research. The latest issue of the Signals report is just out. The title, Bubbly Market Lowers Equity Allocation, Speculation Run Further. Several of our factors that measure the appetite for risk and speculation are now climbing higher and higher. To no surprise, given the way leadership has run in the marketplace, our CRX score has been climbing for the last year and a half, as we came out of the Fed tightening cycle. This reading now is reaching very close to sort of the upper threshold as we would consider a sell signal or overly speculative market. We still have room here, but the important thing is this reading has now accelerated up to almost that sort of over speculative boundary. This is something that's important in terms of market implications. It is rotational in nature. It suggests that leadership stocks will come under pressure. Valuation should matter more. To no surprise, this is a contra signal. Importantly, as you know as well, our crowding reading has been negative the last 3 months or so. That reading remains in the negative territory. I think in the last few weeks, it's gotten a little noisier, but still well above that sort of negative reading for crowded markets. If you take these two readings together between risk appetites escalating and crowded markets remaining fairly extreme, these are things that tell us that caution's around the corner. The bottom line, though, is that some of the fundamentals in the system, the favorable interest rate backdrop, especially with the Fed support in the wings, these things could cause speculation to escalate. Our risk appetite model says there's room here. But at the heart of the day, the fundamentals, if you're a longer-term investor, our asset allocation model has been incredibly bullish the last few years and correct. This reading today, however, is now a 55% allocation to equities, albeit this is still overweight versus the long-term average of a 49% reading. That said, just a couple of years ago, this reading was in the 80 handle. And in fact, a year ago, this was around 70%. So the reality is that the speculative run, the valuations climbing, and some of the fundamental headwinds that are in the wings, such as inflation, tariff costs, et cetera, these things will throw off the sort of bubbly outlook for equity. So it's a really important reality check, I think. Take a look at the full report, and as always, happy to take your questions.